Hey traders, welcome to the seventh and final part of this little mini series where we've talked about developing patience and knowing when to trade. If you are just stumbling across here and you haven't seen part one, go and check it out. 7-part series, kind of about 5 minutes per video, that kind of thing. Very quick to run through. I kind of sped through it as quick as possible, whilst while keeping the kind of topics alive and kind of just running through stuff. So we're talking literally about patience, why patience is so important. Why do we need to wait for the right opportunity? Now, we talked a little bit about predicting people when they're under no stress, under no kind of reason to do something other than a random decision. And the great analogy that I gave you, well, I think it was a great analogy, you might not agree with me, was stopping someone on the street and saying, hey, do you think the market's going up or down tomorrow? You wouldn't know what they would say. And that's the same with kind of traders. And if you don't know what people are going to say, why would you buy it in the expectation that the people are going to buy? They won't. The only reason you buy it is if you were surveying the majority, which is technically what you're doing, or the market's doing for you, and then they're going to come back and say, yeah, I'm buying because it's this and that and the other. So that's the kind of theory behind this. So look at this summary here, guys, in this little Venn diagram. This is why patience is so important. It's so important to wait for the opportunity that we have decided is our edge. And again, maybe different for you as it is for me, but understanding that and recognizing why, because it makes no sense whatsoever to risk capital on anything but your edge, right? When you kind of go through this process and you say, well, I'm impatient, why am I trading impatiently? Why am I not waiting for my setups? You kind of look at it and go, well, it doesn't make any sense for me to do that. Trade when there's an obvious institutional activity and money flow. Trade when traders' emotions are ruling their decisions. Two things that you feel, or I feel in this example, that I can get a handle on and get a grip on, knowing what the next movement's going to be, what the next group of people are going to do, how are they going to decide to position. If I feel I can guess that a little bit better than randomly, then I've got an edge, right? And this might be a little bit of a kind of touch a nerve for a few people. Let me know if you agree on this one in the comment section below. Give it a thumbs up if you do. The markets, majority of the time, are probably moving in a random way. Just like the survey of people is going up or down, because you don't have a kind of a supply-demand imbalance specifically, they move up a little bit, they move down a little bit, maybe they go with the trend a little bit, maybe do this. And so it's kind of difficult to guess and kind of judge where the market could go if they're moving randomly a lot of the time. So our job as traders is to find the time when they're not moving randomly, when they're moving with a kind of a positive expectancy, when they're moving with a little bit more aggression potentially. That doesn't necessarily, like I say, have to be extremely volatile, but when there's something that you perceive there's an edge there. So you take time to think about on all the time frames how the traders are feeling, and that's kind of what this Venn diagram is about. It's like looking, okay, well, what's the big money thinking here? Do they care? Previous example, we're sitting in a range. No, they don't. What are short time frame traders? Do they care? No, they don't. What about investors? Do they care? No, they don't. So no one cares, right? Okay, but what about if we talked about that big spike in a currency pair during the day that was unexpected? Short-term traders, yes, they care. Swing traders and sort of medium-term investors, yes, they care. Bigger money, institutional investors, yes, they care because it's something that they trade and it's something they're probably positioned in. All of a sudden, maybe there's opportunity because we might see a large amount of people doing the same thing, which will give us a better movement, and not just a better movement, which could potentially be more predictable for us, right? Because that's what we're trying to do as traders. We're trying to predict after we've bought who will buy and why will the people next buy and in what quantities. And if we can say, well, I think a lot of people are going to buy after we bought because of this, because this has happened, that has happened, that has happened, then it's probably worth taking the trade. If we can't answer that question, and we can't say to ourselves, listen, I don't know why someone's going to buy, then maybe it's not a trade. Anyway, guys, that is the end of this little mini series, 7-part series, developing patience, knowing when to trade. Hopefully you found it useful. If you've got any comments, then please stick them in the video if you haven't stuck them in the other videos, and we'll have a little look at those, and maybe we can do a review video at some point addressing the comments. Patience is a tricky one. I know that a lot of people struggle with it. I know myself that patience, you want to trade, right? You're impatient because you feel that the more you trade, the more money you're going to make. It's the natural kind of conclusion, but it's not always true. We know that, you know that, I know that. So it's developing that patience, and hopefully you know, maybe you don't agree with everything, but hopefully it's given you some nuggets of things to think about that work for me and how I think about things, that maybe you can go away and take a few of those to implement into your trading, that hopefully moves your trading forward. Anyway, like I said, guys, comments in the comment section below, and if you like this kind of stuff, a thumbs up's appreciated on this video and the other videos. If you get the opportunity to and you have the time to, it's much appreciated. And of course, your subscription for more kind of stuff like this, and maybe go into more depth later on. Whatever you're doing out there, take care and keep the risk managed. Bye bye.